In my previous videos, we spoke about the importance of critical illness insurance, the history of it, and how to select the amount. Today, we will talk about how critical illness insurance will protect your retirement. So stay tuned. So what we're going to take a look at today is two different scenarios. We're going to compare a person's RRSP with and without critical illness insurance coverage. When someone goes through a critical illness, RRSPs are usually the first savings to get depleted. So we're going to look at two scenarios: the effect on RRSPs with CI coverage and the effect on RRSPs without CI coverage. So here's the situation. We're going to talk about John, who's 40 years old. He saves every year into his RRSPs, and at age 50, John gets diagnosed with a critical illness. For this, he will need $75,000 to offset any costs related to the illness, whether he needs to take time off of work or for any other need. The value of his RRSPs at age 50 is $150,000. The cost of his illness is $75,000. In the first scenario, he has purchased $100,000 of critical illness insurance. In the second scenario, he did not purchase any critical illness insurance. Now, in order to clear $75,000, John would need to withdraw $139,000 from his RRSPs, out of which $64,000 would be the tax that he owes, and $75,000 would be the net that is left over after paying the tax, and he will have $11,000 left in his RRSP. Whereas in the first scenario, he has $100,000 of coverage, which leaves $150,000 in his RRSPs. Let's take a look at the future impact of withdrawing his savings from his RRSPs. At age 51, John resumes his contributions into his RRSPs of $5,000 until he turns 65. Let's assume that he gets a 5% return on his investment year after year. At age 65, without any coverage, John would have $136,000 in his RRSPs. Whereas in the scenario with the critical illness insurance, he would have a total of $425,000 in his RRSPs. The total insurance that he had purchased was $100,000. He had used $75,000 out of that $100,000 coverage, which left $25,000. And let's say he invested that $25,000 into his TFSA, assuming it gets a 5% rate of return as well, he would have about $52,000 in his TFSA. In total, John would have about $340,000 more in his retirement savings because he purchased critical illness insurance. The gap is huge between getting coverage and not getting coverage. Critical illness plans have lots of options available. What you need to do is figure out the right coverage for yourself. I hope you enjoyed the presentation. If you need to get a hold of me, my information is on the screen. Please subscribe and like the video, and I'll see you in the next one. Thank you.